Our big guests of the morning, just pulling off a big deal. SAP CEO Bill McDermott and Qualtrics CEO Ryan Smith. Can you hear us, guys?
Yeah, we can hear you.
Okay, good. Okay, we got you. So here's the big question of the moment. I'm going to go to Ryan on this first. You were planning to have an IPO literally this week. It was supposed to happen within days. What changed for you?
Yeah, so we were planning on ringing the bell on Thursday. I mean, I was home this weekend just to kind of take a little break after a week on the road. It was going really well. We were, I think, 13 times oversubscribed with the best still ahead of us. And we had an opportunity to combine forces with SAP and change the experience economy forever. You know, I think in my conversations with Bill, it's something that we only dreamed of, that we could make this happen. And it's pretty special.
Hey, Bill, this is the second largest deal you've done, I think, after Concur. What led you to this moment, and how quickly did this come together?
Well, Andrew, we're reshaping the enterprise application software industry, and what led us to it is all CEOs you talk to want to run their companies on an end-to-end basis. They want to deal with their customers in every channel. They want to fulfill, and that requires operational data. SAP touches 77% of the world's transactions. But the operational data doesn't ask the right question. It doesn't say, why does the customer feel a certain way about your brand, about your products, about their experience? And this new category called experience management is all about X data. And if you can combine O data and X data, you can change the world. So Ryan and I know each other about 3 months. We spent a lot of time together, a lot of texts, a lot of phone calls, and we fundamentally wanted a transformational deal, one that would reshape the entire industry. And here we are, Andrew.
Hey, Bill, we had Ryan's biggest competitor, SurveyMonkey, on this set the day that they were ringing the bell here at the NASDAQ. Was that a company you ever looked at?
No, they do surveys. We reinvent customer experiences in a whole new category called experience management. So if you want to survey somebody, hire SurveyMonkey. If you want to fundamentally change the way an enterprise thinks about its culture, its brand, its products, and its people, now you're talking Qualtrics, the leader in the marketplace by a factor of 10x.
As my kids would say,
this is one of the things we've always done. We've always bought the biggest and the best one. And thankfully, with the high trust that Ryan and I developed and our companies developed, we're ready to go.
Hey, Ryan, help us, though, with this. You would have controlled 48% of the company in a public situation. There have been a number of unicorns now that, rather than go public, have ultimately actually been sold. Over the past 12 months, we've seen probably about half a dozen. Just tell us what went into your thinking on that and how hard it was. There was a bit of reporting over the weekend that suggested this was a very difficult decision for you.
Yeah, so look, we've been doing this for 16 years. We've transformed the entire experience management category. We've created it. I mean, we're powering, the feedback for 14 different airlines, 200 financial institutions. And we really created this category to go do something big. That was the goal. We never had a financial reason to go public. We bootstrapped our company longer than anyone, and we had no investor pressure. We're one of the only companies that has been cash flow positive and high growth since its inception. So the reason why we were going public was to create this massive new category. So when Bill approached us with a once-in-a-generational opportunity that we could take all the power of Qualtrics and our 9,000 brands and have that sit alongside SAP and have every ounce of customer feedback go into the entire product process with an ERP system, reshape how the world thinks about CRM, and everything that we're doing to power all the employee experience of the whole world, that's all available overnight. That's something that we couldn't turn down, and we chose to be here. I mean, our IPO was already way oversubscribed. It was going to take off. Everyone was looking at us saying, hey, this is the next $20 or $30 billion standalone company, but we want to win, and this is what winning looks like, and we're going to reshape the entire industry, and Bill's on board, and we're excited.
It's a cash deal, all cash. Why not take stock? And is that a commentary on anything in terms of the future of what you think this transaction looks like?
No, not at all. I mean, we're all in. I mean, we're absolutely all in. I'm not going anywhere. I've worked 16 years for this day, and I'm more excited about the future than I have been about the past. We're just getting started. I mean, I probably had 20 different emails from analysts and folks out there from the road last week, and my response to all of them was, this is just the beginning.
Hey, Bill, before you go, the stock is down close to about 4% this morning. What do you think investors are getting right or wrong about this right now?
Well, I think initially we were talking about doing tuck-in transactions. So they're probably like, this is a pretty big tuck-in, Bill. You know, what's going on here? Hey, look, here's the metrics. When you're talking about this particular company, Qualtrics, they're growing at 40% on a year-over-year basis in the cloud. They have a very serious go-to-market strategy, but it's modest in size. We're growing at 41% year-over-year in the cloud, and we have a very large go-to-market machine, more than 15,000 people touching the customer every day. So if you combine that rate of growth, you have a global growth juggernaut in the cloud, the #1 business software growing in the cloud in the world. So digest that, dear shareholders. Let me give you another one. We're saying, and we're very clear on this, we're going to grow total revenue in double-digit, operating income in double-digit, not to mention being the fastest growing cloud company in the world. So today this will be digested. Now they'll know, why did he do a big one when he said he was more likely going to do tuck-ins? Because I never thought I would get Qualtrics. And it takes some skill to pull deals like this off and convince a great entrepreneur like Ryan that he's better off with SAP than going it alone when he's 13x oversubscribed in his IPO. So that's what took a little bit of time. And when we pulled it off together this weekend, we were literally crossing each other in the air at 39,000 feet, Andrew. So this was high stakes. And now that we're here, we're doing all hands meetings, we're talking to the media, we're talking to the bankers, and I expect the stock to do extremely well as the day progresses. And more importantly, in the mid and the long term, I'm here to build a company for the generations, not just for a few days.
Okay, Bill McDermott, we want to thank you. Hey, Ryan, before you go, is it true that the underwriters of the IPO, Goldman and Morgan Stanley, didn't know that you were in negotiations to do this deal separately?
No, I mean, that's not exactly true. I mean, we were working, we were communicating. They did a phenomenal job out there on the IPO. And, you know, we had pretty tight communication there. I think we're, you know, if you look at how this happened, I mean, we were pretty set on going public. And so it wasn't until this opportunity came through this weekend where we said, hey, look, this is by far a once-in-a-generational opportunity, and it's going to change how everyone thinks about cloud and SaaS and CRM and ERP and HCM forever. And why wouldn't we want to be a part of that? So we couldn't be more excited. And like I said, this is a pretty special team with Bill and I.